Hi, welcome to Main Street Macro. I'm Mila Richardson. There's nothing I like better than starting my day with coffee. In fact, it's the reason I get up in the morning. I love coffee, but there's a lot that you can say with coffee, and this is going to be a really important cup of coffee for our time together because last week we saw a couple of shifts in our narrative about the global outlook and the inflation picture. Let's start with that all important consumer price index inflation report. It was a surprise to say the least. Now, we expected overall inflation to come down, and it did. It went from 8.3% to just a little bit less, 8.2%. And that includes a whole bunch of things like energy, like food, like the cup of coffee. But the second thing that's really important is the Fed doesn't really look at coffee when it thinks about its interest rate policy. It looks at something called core inflation. It takes this cup of coffee and it pushes it aside and it says, look, food prices are really volatile. And yes, they are driving up inflation. But, since they're so volatile, we're just going to look at this core group of bundled services that consumers have to spend their money on. The problem with this line of thinking is that consumers actually do see food prices, and coffee prices have gone up almost 16% last month from a year ago. So they've been double digits for several months now, and people are really feeling the pain of higher food prices. But even if you strip it out, you strip out energy that's very volatile and food that's very volatile, what you're left with is something called services, services that are driving up what we call core inflation. It went up to 6.6%. That's the highest we've seen since last year in the core inflation rate. And it was driven by two things that it's really hard to substitute around: housing and medical care. So while you can switch from coffee to tea, perhaps you really can't switch out of housing. And that is something that US consumers will feel for a long time. Now, the third thing that's important to understand about all of what we're seeing with prices is how it affects the economy. And we're seeing the global economy actually starting to take a step back. And that was supported by a new report from the IMF that reduced the global GDP forecast for next year. So, all of this taken together means that Main Street is going to feel the effects of still higher prices and slower growth. One thing we know about Main Street is it's very layered. Not everyone will feel the effects of a higher price for a cup of coffee, but people will feel effects of a stronger housing market, a slower economy, and a higher than expected and more persistent inflation outlook. Thanks for watching the Main Street Macro. For a deeper dive on all the data that we saw last week, please go to adpri.org.